This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial markets. And today was another day of defense. If you saw my video yesterday, you know that after Wednesday, I was already up on the week, right? So I went into that day with the mindset that I am playing defense. And the market didn't present what I was looking for. I didn't like it, so I did nothing. And today, all it took was a quick peek at the charts in the morning. And I already know that today is probably going to be an unfavorable condition before the market even opens at 9:30, and it turns out it was. And I'll explain why. So I literally walked away in the first 15 minutes, and this is just going to be a quick video breaking down why I thought the market was going to be unfavorable and how it was based on the things that I saw in the chart. And you can see that this month I'm doing a lot less. How I want the rest of this month to play out and how I want my trading to be is it's either I do nothing at all, or I take a really good setup. I do nothing at all, or I take a really good setup. Nothing at all, or a really good setup. I don't want these red days like this where I hurt myself in a market where I shouldn't even be trading at all. I mean, if we look at these trades, I mean, they're awful. Let's just pull up the conditions real quick. Like, look at the condition that I'm trading in, right? And that's why I hurt myself. It's the same thing with this. Look at the condition I'm trading in. Oh, wait, that's the same day, is it? Here we go. Look at the condition that I'm trading in. It's sideways, it's slow, it's choppy, it's not what I want to be involved in. And that was the condition presented today. And I knew the market was likely to set that up, so I did nothing. I walked away, I got out of there and played defense because by Wednesday, I knew that I was good for this week. I was content with what I made and knew that for the remainder of the week, I have to go into each trading day with the mindset to protect that capital, not put myself in situations where I know I'm going to hurt myself today, and roll that over into the next week and wait for the next good trading day. Tuesday, Wednesday, phenomenal trading days. Thursday, also phenomenal trading day. I missed the move. Friday, not a good trading day. I knew that. I avoided it. So let's get into it. So today's Friday, July 18th, 2025. And today my bias is bullish, not looking for a retracement going into the weekend, because I'm anticipating the daily candle to form as a basing candle, just a small range candle, and see this weekly candle settle near its high, which means today's price action is going to be unfavorable. So I'm already expecting unfavorable price action. I do not like how there's no overnight and pre-market volatility, and price seems to open in the middle of the range, or it seemed like it was going to open in the middle of the range. So, and I've learned through backtesting and just getting a lot of market experience from reps of backtesting and live market experience, that days that I want to avoid are going to present no overnight and no pre-market volatility. So if we look at the conditions for my model, these are ideal market conditions for my model, right? Overnight and pre-market volatility both present obvious liquidity. Unfavorable conditions for my model. No overnight and pre-market volatility. No overnight pre-market volatility. So if we go to the chart today and see what was setting up, what do we see? Let's go to a 15-minute. Is there any overnight and pre-market volatility? No. Really lackluster, really small range. Only a 50-point range in the entire overnight and pre-market session, and eventually it left that. So really, literally nothing at all. Now the market still presents my model, but here's what it looks like setting up, going into the open, and I'll explain what I was looking for. So I was bullish. I wanted to see the market not take this high, drop down, clear these lows, and then trade higher. Because it would see this pre-market range right here, it would go take the buy side first, sell side second, and then make the real move of the day. That's what I was looking for. These highs, this high went above this high by one tick, so I'm still considering them equal. It's still considering this a smooth level in price, an area of liquidity for me to target. So I wanted to see it drop down, take that sell side first, then go for that. Didn't do that, because again, today, like yesterday, information suddenly changed pre-market. We had some random volatility just shoved into the marketplace before the open, and it took the range high. So this happened literally 5 minutes before the open. All the information I was looking at suddenly changed. So I was doing that before the open, right? And it kind of looks like it was going to do that. It was falling, it was falling, it was falling. I thought it was going to trade down here and then boom, do that. But suddenly, new volatility comes in. Market turns on a dime, does not take these lows, and takes the buy side first. So if it takes the buy side first, and you look at how this high stacked above these, you got to ask yourself, why would it trade back in that direction if the damage is done up there? It wouldn't. And opening at the high of day, and we have smooth sell side below. So all this is setting up for my bearish premium gap opening setup, but I was not willing to take it all looking at how the first 5 minute candles painted. Literally, this candle was a large down close candle. If this was a solid trading session, if this was a good low resistance kind of day, the market would have just dropped right here. It wouldn't have done this thing where it just overlapped this candle, slowly traded up, slowly traded up, slowly traded up, and then broke lower, and then spent time around in here, and then rallied up a bit, and then moved lower, and then spent more time in here, and then moved lower. It's just not ideal conditions. And if you were trading this today, maybe you did something good, maybe you put on a solid trade. But for me, for my model, and the things that I look for in price, this is not a good trading day for me. Look how long it spends moving sideways. It did this for an hour, moved up a little bit, and then rolled over a little bit more, and then settled like this on the day, right? So why do I know this is going to be an unfavorable trading day? Well, we see what we had yesterday on the daily chart. We had a large up close candle, made a new all-time high. So typically, the day after we have larger range candles, they tend to just base out, not really do anything. They kind of close indecisive. Now, what also made this candle likely to paint indecisive like this and not do anything was the fact that it's Friday. And if we think about how the weekly candle is going to paint, how is that weekly candle, where's it going to close? It's probably going to close near the high of the candle. Seeing what we've already done on the daily chart, the market's likely to just peter out here and just settle on the weekly range and not do anything. So if I go to my weekly analysis, how am I expecting this weekly candle to close? Since we've left the range on the daily chart and nothing from Thursday tells me we've capped the weekly range, I'm not expecting TGIF. I'm anticipating the market to stay up and settle near its high on the weekly range. On the daily, since Thursday settled on its high, very bullish, I'm anticipating today to either do something similar or do nothing at all and close as a small range indecisive candle. I lean towards seeing it close as a small range indecisive candle because of the lack of overnight and pre-market volatility. It'll settle near the high. It'll settle near Thursday's high and create the daily BISI below. So I'm already expecting this candle to do literally nothing. And I know it's likely to do nothing because we had no overnight and pre-market volatility. Mix that with the logic that it's Friday. Thursday has done a lot. Thursday settled near its high. We've probably made the high on the weekly candle, right? And we're probably just going to peter out and settle near the weekly high. Not really do anything, stay comfortable. So that is why, if we go back to the daily notebook, this is what I'm saying. This is what I'm thinking at 9:35. The most attractive idea to me is doing nothing at all. I don't think how anything, I probably meant I don't like, or I don't know what I was trying to say here, but I don't think how anything is setting up. Okay. There we go. I don't think anything is setting up. I don't see the idea to buy the market right now and to sell it. There isn't enough range. It'd have to make a higher high, really make that diversion with ES, then show me it wants to break for obvious pre-market sell side. With what's in the chart, it makes total sense to see it break for pre-market sell side. So I know it's going to go for that level. But for me, I was watching this large down candle, framing the idea on this, anticipating this to be an order block. So what would my risk be? I'd probably buy or sell below that candle. My stop would probably go here. And then what am I targeting? I'm going to target that. Like there's not enough range there. And below that, yeah, sure, this level. This level is a strong draw because below it is a gap that it's there on the 4 hour. It's below. I'm going to put this on the 4 hour. So this low is a strong draw because we have a gap below it on the 4 hour, on the 1 hour as well, and the 15-minute. So now we have 3 time frames agreeing that this is probably a strong draw. It's a strong probability that the market's going to want to reach down there. So when this candle drives above that high, I'm asking myself, why would it trade back in that direction? Why would it trade back in this direction if it's just extremely smooth below? Why would it do that? It wouldn't. This candle drives above pre-market, 9:30, boom, large down candle. I'm starting to read the sell. I'm framing the risk on the idea. Thinking, okay, here. Maybe it can go in the midpoint, reduce the risk on it, whatever. But where am I going to want to target? Right there. So there's not enough range between where the reversal was occurring and what I wanted to target. I knew the market was drawing for this level with confidence. This level, not so much at the time. In retrospect, yeah, of course. At the time, I wasn't thinking that. And then I see this candle dries above this high, failed, close lower. This candle dries above that high, failed, close lower. So at this point I'm thinking, yeah, it's gonna break lower. I don't want to be involved with it. I'm noticing how these candles trade just really small, not really going anywhere. It's not worth it at all, you know? So it starts to break lower, I'm gone. So you can see how at 9:37 I was really like, yeah, fuck this, I'm out. It's not worth trading at all, right? And then do my little thought process analysis after the market. I know conditions are super shit. My long idea doesn't make sense with how the market suddenly shit the pre-market. 9:37, goodbye. I know when shit conditions are present, I have the ability to do nothing. That's good, bro. Good. I'm so proud of myself for actually being able to do this. If you listen to every successful trader, they're going to tell you, like, once you can do this, that's when you've arrived. I'm starting to do this now, but only because I have a model and I know exactly how I want the market to set up for me to do something. I know exactly what the market looks like when it's worth it for me to do something, and that just was not here today at all. The only reason I know that is because I've finally settled in on one model, one thing that I want to do, and it makes sense. So since I've done that, here's how I'm trading this month. I'm doing a lot less. This day, showed my model, wasn't able to execute on it. This day, showed my model, wasn't able to execute on it. This day, showed my model, wasn't able to execute on it. This day, I left early. This day, my model was there, execute on it. This day, my model was there, execute on it. This day, my model was there, but I had the wrong buys. Right? Let's look at what happened, or let's look at my approach. Correct? I was incorrect. Order flow of the overnight session actually proved the market bullish. Or what happened here was the idea that I was looking for played out, but it literally happened pre-market. So I know what happened every single trading day because I do this day-to-day process recording my data. Wednesday, like I said, checked out early because the market just made a huge swing at 9:30. Thursday, it was there. I missed it. Wasn't able to trust it. Friday, it was there. I missed it. Wasn't able to trust it. Monday, it was there. I missed it. Wasn't able to trust it. And a lot of that has to do with my market approach and how I approach the market. Because how you approach the market is basically how you're going to look at price after 9:30, and that's going to affect how you're reading that information, what that information is telling you. Because if you're looking to buy the market, you're going to read the market as bullish. You're going to ignore the information that's telling you it's bearish. But what if the market actually is bearish and it's breaking lower and you're incorrect? It makes it really hard to catch that move, right? So this wasn't able to trust it because I was looking for new day opening gap and basically gave that to me pre-market. So a lot of these sudden shifts and what's happening pre-market made me miss this idea, and this kind of messed up the idea I was looking for today. That's basically what's going on. So, like I said, quick video. Not really much else to say besides the fact that I'm just still growing comfortable with my playbooks, building more experience in that. That's probably going to do it for this video. Like I literally walked away in the first 15 minutes. There's nothing really much to talk about. So I'm going to be back next week. We'll be trading next week. We'll be showing up consistently every day, Monday, Tuesday, Wednesday, Thursday, Friday, and then the following week as well. And that'll do it for the month of July. So appreciate you for sticking around. I appreciate you for supporting the journey, and I wish you the best of luck in yours as well. Hopefully I can inspire you to put in this extra work that has really been allowing me to grow recently. Hopefully I can show you what that is. If you need some help with where you're at, let me know in the comments, and I can probably help you out. I've got almost 2.5 years of experience in this game, and I know where I'm headed. So if you're maybe struggling with something, let me know, and I would love to help you out. With that being said, that's the end of this video.